I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk with you. How are you doing?
Well, I'm doing great. Vancouver, after 6 weeks of real winter with snow and ice, back to its usual deluge of rain and gloom. But we're used to it. What about the rest of the world? A big cloud hanging over a lot of folks wondering, what is Donald Trump going to do?
Well, I think he actually is coming into office with an agenda that he's going to implement. I think he's going to cut taxes. I've seen reports that Paul Ryan actually already has a tax bill planned out to cut the corporate tax income rate to something like 20% and lower people's income tax rates. It's not as low as Trump was saying he's going to do, so they may be negotiating on the extent of it. But the thing is that this is their first priority, and so is doing something with the so-called Obamacare, who knows what. And the infrastructure programs that Trump spoke of doing, and I think are very important to him, they sound like they're going to be pushed off till these other pieces of legislation are passed, and possibly even pushed out even further beyond that till next year or the year after. I suspect that Trump and his advisors may be waiting for another stock market drop way in the future in order to take advantage of that to enact more legislation, more reforms, and do their spending programs that they have planned out. I don't think they have the necessary political backing as of this moment to do it, but a crisis, they can use that to whip people up into a frenzy. And one of his closest advisors is Steve Bannon, and people should go and look back to an interview he gave shortly after the election about this, because that's basically what he said, that they plan on remaking American politics and realigning the parties after a crisis happens and taking advantage of it. But we're not in a crisis right now, and I don't think one's coming next week or next month. We're kind of in a funny situation where you watch the news, you see the headlines, and it's quite remarkable, the turmoil you see on television, and there's signs of political instability inside the United States that really we've never seen before. And I'm not speaking of elections, but battles in public between Donald Trump and the Central Intelligence Agency, leaks against Trump. A document was leaked out just a week ago saying that Trump had traveled to Russia years before and, had some strange visitations with Russian people, and some of his campaign agents had gone over there last year and visited Russian government officials and so forth. This, though, was opposition research created by an ex-British intelligence agent. It's not sourced information, and no one in the media has really been able to verify any of it, but it was in the news cycle last week, and it resulted in Trump giving a press conference denouncing leakers, denouncing the Central Intelligence Agency, and saying that they are acting akin to Nazi bureaucrats during the rise of Hitler, as they would do cruel things to their opponents too, and smear them and attack them. These are quite remarkable statements. It gives people the impression since the election that there's movement afoot to prevent Trump from becoming president or impeach him or get him out of office or so forth. If you can think back to right after the election, there was talk then of, oh, let's get the Electoral College to not vote for him and throw their votes to somewhere else. There's a movement of that on the internet. Even talked about on MSNBC. There was a Washington Post editorial actually calling for Electoral College to revolt against Trump, amazingly enough. And none of that happened. And I think instead what this really represents is a battle between Trump and elements of the American foreign policy intelligence establishment in regards to how he wants to change foreign policy and basically redirect our energies in opposition to Russia to opposition against China. And there's many people in the intelligence establishment who have built long careers out of battling against Russia and spying against them and treating them or considering them as the number one enemy. You also have the Syria situation, which has been a big CIA covert, well, not really covert, everyone kind of knows it, but operation to oppose Assad over the years. It's kind of failed, and Trump is pulling the plug on it, or at least plans to, and that's something I would assume these people who have been opposing Trump are not too happy about. But the point is, it's a public battle that's been on television that we've never seen before, a press conference of the likes we've never seen before either. And this, I would suggest, is a sign of political instability. However, all that said, this is what's in our minds, this is what we see. But when you look at the financial markets, they're not unstable at all. It's the complete opposite. And I think there's a calmness in the financial markets that may last for several more months, but will eventually come to an end. And we're once again kind of being lulled to sleep to looking at our investments or paying attention, because frankly that nothing is happening or seems to be happening when it comes to the stock market. All the action is, in regards to Trump and this controversies around him. But if you look at the S&P 500, there's an interesting thing happening that's worth noting, and that is that we've come into this year of 2017, and the volume has been extremely light. Typically, January is a month of the most volume in any given year, and so far there's less volume this month than there was in December, than there was in November, than there was in October or September. So it's a month where people don't seem to be wanting to do anything in regards to trading or buying for the most part. And if you look at the actual price action, the market averages, the Dow, the S&P, and the NASDAQ are trading much like they did in August. Now, if you can remember back to when we were speaking in August, I was making note that I was seeing something I'd never seen before in the years I was trading the markets, and that was the daily price movements had shrunk so much that I'd never seen it like that. I use something called the 20-day Bollinger Bands to measure price volatility, and they had reached a low level that they had never been before since I had been in the markets, and I had to go look back to 1993 to see the market trading like this. Basically, wasn't moving at all, and the same thing is now happening that I saw happen in August. Now, when Trump won, we saw the Dow take off to 20,000, and a lot of people got very excited on that rally. In fact, I bought stocks the day after the election, the next day. I closed out short positions. Those were bets I had against the stock market, and bought myself, bought more as the week continued, and made other changes in my accounts. And I must admit, it was fun watching the Dow go up to 20,000. And I was hoping that could represent at least a return of big moves in the stock market, because we hadn't seen big moves in the stock market for years. Really, the overall volatility has been low for 2 years. The S&P 500 went up 9.9% in 2016. However, that gain of 9.9% was generated because the market had actually fallen in the fourth quarter of 2015. So it started from a lower level. If you go back to the summer of 2015, the S&P 500 is not even up 7%. So the gains are very limited in the market, and over the past couple of years, what you've basically seen are professional traders and market commentators look for signs of a big move. So you'll get people who are bullish on the market look for up days as signs that we're about to make a giant acceleration to the upside. I follow lots of bullish people on Twitter, people that are actually superstars on CNBC. And what I notice is a lot of these people in their writings too, they kind of want to see a giant run like we saw in 1999 in some element of the stock market. They want to see the technology stocks blast off one more time, and they say this will be the final bubble run. And I think a lot of these people think they're like going to be able to retire off that or something. Then on the flip side of that, you have people who are bearish on the market, assert, and I think correctly, and I've done this myself, that the stock market's overvalued from a historical standpoint, that it's really unsustainable, and one day there's going to be a great reckoning out of all this, and I think that is the case. However, over the past 2 years, there have been times when the market would dip for a week or 3 weeks, and you would see it fall down towards a support level, and the bears would come out and say, oh, here comes the crash, and then support would hold, would bounce back up, and they would be proven wrong. The point is, both the bears and the bulls have not seen the type of moves that they've been looking for, and that makes for a difficult environment to make money in if you're trying to trade the stock market, because it's very difficult for people to sell out, raise cash, and market tops so that they could buy into a correction. Very few people do that. What they tend to do is see the market rally, buy into the rally, then it dips 10%, and then they sell out on the bottom in disgust, and the process repeats. So a lot of people have been spinning their wheels over the past 2 years. In fact, at the end of the year, I looked at the returns for hedge funds, and while the S&P was up close to 10%, 9.9%, the average hedge fund hadn't even made 4%. So it's been a tough market for most people to make money in. The best type of market is one that goes up month after month after month after month, and that's not been the case with the U.S. stock market. In fact, the best gains in the U.S. stock market have come after corrections, when you get whiffs of panic in the market that cause fear indicators such as the VIX to spike up above 25 or 30. So if someone wants to make money in the stock market, I would suggest the best way to do it is raise some cash now and wait for a dip or a drop that brings in some panic in the market, and then buy and look at what are the best sectors to buy into. And that's a game plan I think can work this year, even if it goes against what most people want to hear, because the people who are bullish on the market, they don't want to sell anything, and the people who are bearish on the market, they don't want it really to buy either. So that's the U.S. stock market. However, this low volatility will eventually change, and there are threats down the road, such as higher interest rates. The Trump administration and his economic team have asserted that low interest rates and quantitative easing have totally failed to create an economic boom or any meaningful recovery for the American people. Those assertions, I believe, are completely accurate. I think the statistics show that. They did help prop up the stock market, though, by encouraging corporations to take advantage of the low rates, to borrow money to buy back stock, and they're still doing that. But it's a question of, at some point in the future, rates will go up enough that it'll be more difficult or too difficult for corporations to engage in these share buybacks that prop their shares up, and then the fact of overvaluations will become the dominant factor and drive stock prices lower. But that's a process that could take 6 months or 12 months or 24 months. I really have no way to predict it. All I can do is monitor how the technicals of the market are trading at the moment and look for changes. And right now, I can't point to anything that's to suggest the imminent drop is upon us. So what I'm doing is having some cash reserves in order to buy in a dip. I do have long positions too, some, and watching for signs of a drop. And if I think what's coming, then I'll start to hedge the long positions I got, or even make bets against the stock market. But outside the stock market, there are opportunities to get out of this kind of dead money situation. And I think this year will be somewhat of a repeat of last year in that regard, because while the S&P 500 was only up 9.9%, gold stocks absolutely soared. The TDX gold stock ETF finished 2016 up over 54%. It did have a correction from the summer until really the end of December when a bottom was put in, pretty substantial correction. But even with that correction, they still managed to finish the year up 54%. Now, 54% is a massive return. It dwarfs the U.S. stock market. It makes chasing the Facebooks and Apples look silly, which it really is. And I think besides being patient and waiting for a market drop to buy, I think this year one could also put a portion of their money into gold, silver, mining stocks, and by the end of the year, beat the market too. If you just put 10% of your money in there and it doubled, well, that's boom, a 10% return for your whole account. Now, I don't think it's something you also have to be patient on, though, because I don't think gold and the mining stocks are yet in a position to completely go totally crazy. They corrected last year, and they had what I think was the first year of a multi-year bull market that came after a gigantic bear market where the mining stocks fell over 90%. They topped out in 2011 and really cracked and began to crack in 2012. Well, the thing is, the first year of a bull market after such a horrible bear market typically sees a huge return in the space of just a couple months, and that's exactly what we saw last year. What's important, though, for now, is that after that first phase in a big bull market, you typically will see a consolidation period of sideways action, which can last from 3 months to 10 months, sometimes even a little longer than that. And that's what I think we're really in at the moment with gold and the mining stocks, that we did have a sharp drop that lasted until December. Now we're rallying off of that bottom, but I don't think this rally is going to be the one that's going to take us up to 1,400 on the price of gold or new highs above last year's highs for the mining stocks. But I think it's going to consolidate, set the stage for a much bigger move. And when that move starts, when you get the second move in a bull market, that's when you see something that goes up for basically month after month after month for several years. So I think that's what's ahead of us, starting some point this year. And, right now might be a boring period for gold investors even, but certainly for the stock market. But the excitement will come back, particularly for gold stock investors. And I think that's really what we got to look forward to, and just be a little bit patient at the moment for that moment to come.
We'll have more with Mike Swanson right after the break.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Mike Swanson. Mike, what do you see happening with crude in the short term?
Well, crude also had an interesting rally last year. Of course, oil topped out in 2014 and had a vicious drop that lasted until 2016 when oil went below $30 back last February. But now we've rallied back up to $55. And I think we're in another one of these long, drawn-out, sideways consolidation zones for oil. But I think this one could actually last another year or two. And the reason why is when oil started to drop in 2014, there were statements made by the Saudi oil minister that he wanted oil to stay low long enough to make the American oil fracking companies and subpar producers go bankrupt and go out of business, so the Saudis could recapture that share of the oil market. And that's an operation I think they still have it in mind. And going into that peak in 2014, there was build up in the futures market of record oil short position among commercial hedgers and producers. These are the giant conglomerates that use the futures market to hedge their prices. So they locked in those prices 2 years ago, and that short position has only been reduced by about 50%. I would like to see them get down closer to being net long oil before I'd get extremely bullish on oil. That said, back in November, finally, OPEC had a meeting where the Saudis were cooperating with the other members to stop the drop in the prices or maintain a higher price above the $40 barrel level. So I think we're locked in a range here of, $40 and $50 in oil, a barrel oil for probably some time before the frackers go out of business. Now, one thing worth noting, I think everyone that's trading oil one way or the other needs to keep in mind is the Saudis, one of the reasons why they wanted the oil prices to stabilize last year is because they're planning on doing the biggest IPO in history, and that's the IPO for the Aramco oil conglomerate, the Saudi giant oil producing company, many whose shares are owned by the sheiks and, the billionaires that own Saudi Arabia. It's a kingdom owned by these princes and so forth, and they own this Aramco, and they're going to IPO it. They own shares in it. What that means is that they want oil at they don't want oil collapsing, because then the Aramco IPO won't be worth as much money. So they want a stable oil market in order to float their company. But once that happens, I fear that the oil drop will begin again, because then they'll have gotten their IPO out there, and then I think we might see a flush out drop after that. That could be the final correction or drop for oil before the next real big bull market starts. Now, with the Aramco, one thing that has happened with that story is the OPEC meeting was before the Trump election, and then the Trump election came, and they're not. And then it came out in the press that they're not sure when the IPO is going to happen because of Trump. They're planning on doing it on the New York Stock Exchange, and now they don't even know if they're going to do that. They might move it to another exchange. So the Trump factor has brought uncertainty to when this IPO is going to come out. And so I think, they want to talk to the Trump people or get a better feel for, how mean is Trump going to be on Saudi Arabia. One of the concerns they have is about this 9/11 bill that was passed last year that gave the ability for the 9/11 families to sue the Saudi government in civil courts for the death of their loved ones. And Obama opposed that, and Trump is for it. So, here's a case: is the politics, going to trump these 9/11 families, or what's going to happen? We don't know. Is that legislation going to be nullified somehow? So we'll have to see how all this plays out over the next couple months.
Mike, thank you so much for chatting with us.
Thank you. It's great to talk to you as always.
My guest has been Mike Swanson, editor of WallStreetWindow.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.